Today we are deep diving into yet another practical aspect of life insurance policies. In my sample case study today, I am taking into account a company, naming it Apex, which does steel fabrication in UAE. The annual turnover of the company, I'm assuming it's about 60 million dirhams, and there are 3 partners in the company. So it's a common practice that people with multiple specialities and expertise could come together with a common idea, start a company from scratch, and build it up and work together in the company. It's a strength, but as the company grows, there also grow some risks associated with that. So we are looking at how a life insurance can mitigate some of the risks and legal consequences the company can be in the future. Here we are seeing on the board that there are 3 partners, A, B and C. Partner A takes care of the marketing side. He has a skill of getting the business flowing into the company. Partner B takes care of the technical aspects, make sure the quality is as per the client has ordered, the resources are being economically used, and they're doing a good job. In finances, he is good in numbers. The person C makes sure that the company's financials is in good strength, good shape all the time. The credit outflows are in control, the receivables are happening on time, the salaries are going on time, and the company has a good financial goodwill. We can assume, or it's possible that the work, each one of them has a different value, but assuming that they all started the company with equal capital, right now we can assume that all of them has equal value in the company, 1/3 the share. So 60 million and 1/3 the share, each one of them is worth 20 million dirhams. 20 million dirhams of share in the company. So everything is good when everything is going good, and nobody takes a life insurance because I have decided to die. Life insurance is taken, or any insurance for that matter, is taken so that if something goes wrong, then the financial consequences of that event should not deter the entire functioning or whatever was dependent on it. To look at Apex, it's not just 3 partners. There are family members to these partners. Mr. A has wife and 2 kids. B has wife and a child and parents depending on them. C with his family, you can imagine. Not just that. Think about the employees. There are 50 employees depending on the company, and they are thriving, and their families are thriving on this company. There are other suppliers who are providing the goods, maybe for credit and expecting a payment, banks who have given facilities and finances. So things could completely go to a standstill. I mean standstill, if let's assume one of the partners has to pass away. So if I'm killing partner A on the board now, if partner A is not there tomorrow, and he is a signatory on the check and on the contracts, and anything to move further from there, nothing can happen if the bank has decided to freeze the account, and that's a mandatory process. If death happens, the company's accounts are going to freeze. Employees are going to wait for their salaries until the legal nuances are loosened up. Partner B and C cannot gain complete control on the company because the legal consequences is that 1/3 of the share, as per the memorandum of understanding, should be settled to partner A's family members. And it's not just because it's a legal thing. Partner A and B, A, B and C and their families are together a single family. They started the whole venture together. They reached so far together, and it really does not look nice to throw the family members of partner A, the deceased partner, just out of the bus like that. It really looks nice when B and C settles the family members with the rightful share, 20 million dirhams to the family members, execute a buy-sell agreement, which by the way could be amended onto your memorandum of understanding, that these specific insurance policies are in place to execute the buy-sell agreement. The proceedings would go to the family members so that the surviving partners can gain complete control. In this way, you are ensuring the financial commitments of the company are moving forward, the functioning of the company is moving forward. You are eliminating any possibility of unwanted parties wanting to get hold of a share of the company. You are also making sure that partner A's family members are financially safe. What if the spouse had no knowledge to enter into business? What if the family had 2 small children and they were very small to do anything in the business? What if they didn't have any interest at all? What should happen to them tomorrow? So that part would be taken care of. And I believe if a partnership insurance is not in place in this era in UAE, you are going too reckless. The solutions are very simple, which I am going to talk about in detail on another video, because this video is long enough. Here I have talked about the problems companies can be in if a simple business protection insurance is not in place. In the next video, we are going to see what are the different types of insurances you can use and what are the value additions and pros and cons for a detailed understanding on the solution side. And by the way, anything what I said on this video cannot be taken as financial advice, because individual circumstances can vary. There could be several moving parts in a business protection assessment, just like we did. This was too simple. So if you want to take any decision, you should go and talk to your financial advisor first and get an advice based on your personal circumstances and tailor a plan matching to that. Thank you and see you in another video.